This is Pete Moore on Halo Talks NYC. I have the pleasure of bringing back to our podcast channel the one, the only Julian Barnes. We're going to talk about the BFS 2025 report and everything that's going on in the boutique industry as a fast break. So, Julian, welcome back to the show.
Hey, what's going on, Pete? Thanks for having me again.
So, I love the data that you guys are providing, and not just qualitatively, but quantitatively, finally, where I could actually have a statistic and it can be backed up. So I love the fact that the referrals are coming in at 44%. And I want you to give us a quick overview of what the report has so we can make sure everyone's reading it after you overview it.
Absolutely. But again, thanks for the opportunity. We've spent the last 9 months conducting a worldwide survey, mostly North America, but a little light representation from UK and Australia and a few other countries, asking studios across the entire world, across every modality, what their metrics look like so we could produce a profile of a profitable studio. And not only did we do that, we produced 7 profiles. So I'll talk about one of them today. Let me show you the profile of a profitable studio, all modalities, any market size. And this is only profitable studios. They are overwhelmingly generating less than $500,000 in revenue with a profit margin of 10 to 19%. They are single location businesses averaging 2 to 2.5 visits per week. They have between 100 and 249 clients, and their average revenue per member is between 100 and 249. They pay their front desk people 16 to 20 bucks an hour. They pay their instructors 26 to 50 an hour. Their managers earn 50,000 to 75,000 per year. Their churn is less than 5%. Referrals is their most effective lead generation tactic, and they're spending less than $2,500 a month on marketing and paid ads. That is the profile of a profitable studio, any modality, any market size.
The one thing that's interesting to me is some of the groups that I've seen in New York are starting to add more and more classes to the menu. And I liken that to Southwest Airlines. They fly that plane 14 hours a day, and some airlines are at 8 to 10 hours a day. So the studios that are adding the classes are adding the volume.
Absolutely. And so one of the results of what you just said is we saw an increase in the number of studios that are generating a profit margin of 20% or more. That increased from 9.2% to 17.4% from 2022 to 2024. Now, that's still less than 1/5 of the entire market, but it is almost a 100% increase from the last time we conducted the survey. So that is significant for investors out there and owners that are thinking about investing, to know that that there's a segment of the boutique fitness community that is becoming more profitable. And you know better than anyone else how critically important it is for these businesses to run, when I say profit, at a 20% profit margin. That's what this number says. 20% of the studios we surveyed are generating, 17% of the studios we surveyed are generating a profit margin of 20% or more.
Julie, when you look at QSR and fast food restaurants, their barometer is kind of a 15% margin, just given the food and the labor cost typically being around 60%. So if you are a small operator in the boutique space, if you're getting to 20% and higher, you're doing the right things. And I would hope, as you are hoping as well, I'm sure, that people are continuing to increase their price, because the price to value that you're delivering to help someone lead a healthy lifestyle is worth way more than what their per class session is. And don't give up on price, because you'll never get it back.
That is absolutely correct. In fact, I was just at a dinner a couple nights ago with some industry colleagues, owners, and other vendors in New York City 2 nights ago. And one of the points I made is that our industry as a whole doesn't charge enough. And I'm not saying they're not charging enough for the commodity of fitness. It's my opinion that we're not charging enough in the role of preventative health, in packaging what we do as helping people improve their health. If you told me that you could absolutely transform my life, there's no amount of money I wouldn't pay. I would pay anything for that. And not only that, it would be the last bill I would cut. I would cut my Netflix, I would cut my Whole Foods, I would cut almost everything before I cut my bill that I pay every month to whoever is helping me live a healthy life. So yeah, you're absolutely right. We're not charging enough.
Yeah, Julian, there was a client I spoke to the other day, and my eyes popped open. He had a $385 per month unlimited membership, and I said, "How did you get to that?" He's like, "I'm not afraid. I'm not afraid to charge that because I know I deliver that." And I
Exactly
love
right.
that fact. He was just
Exactly.
not afraid. Like, I'm not going to lose business. That people are actually going to perceive it as something that's different than some of the other places that are, if something's priced low, it means it's less expensive because for a reason, because it's not as good.
Correct.
So
Correct. Right. So here's the other good news from the report. It's what you're looking at here on the screen. The profitable studios are executing the fundamentals of studio ops at a very high level. They are consistently and rigorously implementing basic, boring, fundamental principles of studio ops. What do I mean? They are finding, so F is find. They're finding new leads at 50 leads per month. E, they are enrolling these leads by converting them at a 30% conversion rate. And R, they are retaining these new members with a less than 5% churn rate and a 2-year LTV. So they're finding, enrolling, and retaining. And as I mentioned a few minutes ago, referrals is the number one or is the most effective lead gen tactic. So it doesn't require you to have a huge digital marketing budget. You don't have to hire an agency. You just have to do the consistent things well each and every day. And that is proven from this report to be the path or one of the paths to profitability. So that I think that's a great message for everyone to hear.
yeah, and some of the takeaways that we see from some of the clients, when we say this is what you need to do in order to build a relationship with someone, and if they leave your studio, they broke up with you. Okay, so let's like call it what it is. I have a relationship. You deliver. I pay you for that relationship. That you deliver value, or you didn't give me what I expected. And I feel like a lot of studios are starting to understand that it's not just the word community. It's relationship, and it's got to be real, and it's got to provide results.
Well, and that's who drives the referrals, as you can see here on the screen.
Yep.
Right, there are lots of different ways to have referrals. It can be indirect, direct. You can reward members. It can happen organically. But the point is, word of mouth marketing is the most powerful form of marketing. And I'm not going to call it free, but it's not expensive. Right? It's not hiring an agency and trying to figure out the algorithms changed. It's really based in client experience because if you keep your clients happy, they're going to tell their friends, hey, you should join me for class. So that's takeaway number 3. Referrals are the most effective lead gen source. And then I want to jump to takeaway number 6, which is the one that surprised me the most. I wasn't expecting it, but it makes a lot of sense. There is a direct correlation between studios that have a manager and their top line revenue and their profit margin. So in other words, if you're listening to this and you're thinking you have a part-time manager but you can't afford to invest in a full-time manager, or you wish you could afford a manager but you're not willing to make that investment, this takeaway is unequivocal in suggesting when you invest in a manager, your total revenue will increase and your profit margin will increase. And if you think about what I said a few minutes ago about find, enroll, and retain, well, that's the manager's job, to be finding new leads, to be running the plays, to convert those leads into members, and running the client experience plays to keep those members for 2 years or plus. That's the manager's job. So when you have a manager focused on doing that, then you, the owner, can be out there growing the business, cultivating
Yep.
relationships. Hard to do both.
I will say is two takeaways here, and this is great stuff. One is a client of ours used to use this phrase. He's like, I can't microwave a manager. I have to crock pot him. So invest not only in the right talent, but cultivate that talent make them part of the ownership team, make sure everything's aligned, and make sure they get educated by going to events, by getting online, by doing continuing education. And then my other takeaway here with you is when you get this report, and there's a link to get this report, don't just read the report. Okay. This is basically a playbook of someone else's scorecard on how they run their business. And these are attainable statistics. So if I say someone's getting 50 leads a month, don't tell me you can't get 50 leads a month.
Correct.
Because it's getting done and it's across the world. So make this a benchmark, make this a bar that you need to cross. And successful studios make successful communities. Successful communities make successful health environments for all of us. Go Halo, go BFS. Julian, look forward to seeing you in person. 1, 2, 3, Halo.
Halo.
Halo, baby. All right,
hey,
good
Julian,
stuff.
Where could they get the report real quick?
BFSreport.com, BFS Reports with an S.com, either one.
Fantastic. Thank you.